a supplementary estimate. The 2026 appropriations remains unchanged. Right, Honorable Speaker. However, we are undertaking a strategic realignment of expenditures within the existing appropriations. Mr. Speaker, government also affirms the following macroeconomic target for 2026. Overall GDP growth of at least 4.8%. Non-oil real GDP growth of at least 4.9%. Mr. Speaker, NDI inflation of 8% plus or minus 2%. A primary surplus of 1.5% of GDP on commitment basis, and a gross international reserves sufficient to cover not less than 3 months of import. Mr. Speaker, beyond fulfilling a statutory obligation, these statements tell the story of where Ghana stood, where Ghana stands today, and where Ghana is heading. Mr. Speaker, I respectfully request the full text of this mid-year fiscal policy review be captured in the Hansard in its entirety, while I present the highlights to this House. Mr. Speaker, before I present the details of our economic performance, we must briefly recall where we came from. I do so because the lessons of economic history must never be forgotten. Mr. Speaker, when this administration took office, in January 2025, President Mahama inherited an economy on its knees. Right, Honorable Speaker, the economic crisis of 2022 was not merely an accident. It was the consequences of a series of wrong policy choices. Choices about reckless spending, choices about excessive and binge borrowing, choices about lack of accountability, and a failure to level with the people of Ghana about the true state of the Ghanaian economy. Mr. Speaker, the consequences of those wrong choices for the Ghanaian people were so severe. The cedi depreciated at levels never seen before, eroding savings, businesses, business capital, and purchasing power of millions of Ghanaians. Inflation exceeded 50%, dramatically increasing the cost of living and placing basic necessities beyond the reach of many people. Real disposable incomes declined sharply. Interest rates surged, making credit expensive for the private sector. Investor confidence collapsed. International reserves fell to extremely low levels. International credit rating agencies downgraded Ghana's sovereign debt to levels never seen in our history. Mr. Speaker, Ghana lost access to the international capital market. The previous government implemented most painful debt restructuring program that imposed crude and painful haircuts on domestic and external bondholders. Financial institutions and individual bondholders also suffered significant losses, with many losing their lifetime of savings. Even pensioners were not spared the burden of crude and painful haircuts under the DDP. The Speaker, and businesses closed or relocated, jobs were lost, and many households that had escaped poverty fell back into hardships. Mr. Speaker, this is an honest account of the economy and the one that His Excellency the President inherited. We recount this event not to dwell on the past, but to remind ourselves of the heavy price of fiscal indiscipline, excessive borrowing, weak accountability, and dishonest economic management. Mr. Speaker, Ghana must never be brought this low again. Right, Honorable Speaker. Right, Honorable Speaker. These painful experiences must strengthen our collective resolve to safeguard macroeconomic stability and ensure that such a crisis is never repeated. As a nation, we must internalize the true cost of economic mismanagement and commit ourselves to sound economic stewardship. Some lessons cannot simply be taught, they must be lived. But once learned, they must never be forgotten. Never again, Mr. Speaker. Mr. Speaker, this administration assumed office. When this administration assumed office, it moved swiftly and decisively to stabilize the economy and begin the work of national reconstruction. It was immediately clear that the old model of managing the economy had failed, and Ghana did not need incremental adjustment, but it needed structural reforms. We therefore took difficult but necessary decisions which were neither politically convenient nor painless. These decisions demanded our collective sacrifice, Mr. Speaker, but they were necessary to restore stability and rebuild confidence. Right Honorable Speaker, the progress Ghana is recording today did not happen by chance. Some have suggested that our recent macroeconomic gains are simply the product of good fortune. Others have attributed the recovery solely to the debt restructuring program or the IMF program inherited in 2025. But Mr. Speaker, I firmly disagree. Our recovery is as a result of superior economic management. Mr. Speaker, for emphasis, I firmly disagree. Ghana's recovery is as a result of superior economic management. Debt restructuring may create fiscal space, but it does not create fiscal discipline. Right Honorable Speaker, an IMF program may provide a framework, but it cannot substitute for sound policy, disciplined implementation, and political will. Sustainable economic recovery is built on good policy choices, competent economic management, and disciplined execution, and most importantly, courageous leadership. Mr. Speaker, the evidence before us is overwhelming. Ghana's recovery has been driven by a deliberate program of economic reforms implemented since President Mahama assumed office in January 2025. These reforms have strengthened public financial management, restored fiscal credibility, improved revenue mobilization, reduced fiscal risk, and reinforced macroeconomic stability. The results speak for themselves. Every major macroeconomic indicator has improved significantly. These outcomes are not accidental. They are the product of reforms, discipline, and sound economic management. Mr. Speaker, it is therefore important to place on record the reforms that have delivered this turnaround. Mr. Speaker, the recovery of the Ghanaian economy has been anchored on three key transformational policy reforms. These key transformational reforms are as follows. The first is fiscal correction. The second is the modernization of Ghana's tax regime. And the third is a complementary fiscal policy for inflation targeting and exchange rate stability. Mr. Speaker, the first key transformational policy reform was fiscal correction. The objective was straightforward. First, to assume control over public finances. Second, is to introduce new expenditure discipline. And third, to place public debt on a sustainable path. We therefore recalibrated Ghana's fiscal framework to ensure greater efficiency, stronger accountability, and fairer burden sharing across government. Right Honorable Speaker, the 2025 budget reset expenditure to 2023 nominal levels, eliminating wasteful spending that had weakened fiscal management over the years. As a result, primary expenditure declined sharply from 18.7% of GDP in 2024 to 13.2% of GDP in 2025. Mr. Speaker, a 5.5% adjustment without hurting economic growth. Most importantly, Right Honorable Speaker, the primary balance also improved from a deficit of 2.9% of GDP in 2024 to a surplus of 2.5% of GDP in 2025, placing public debt firmly on a downward trajectory. Mr. Speaker, a fiscal adjustment expenditure led by 5.4% of GDP in one calendar year. Mr. Speaker, this sent an unmistakable signal to Ghanaians, investors, and other development partners that fiscal discipline is the new order. Mr. Speaker, government also recalibrated the IMF program, shifting the emphasis from revenue-led to expenditure-led fiscal consolidation to achieve a fairer sharing of the adjustment burden. We amended the Public Financial Management Act to institutionalize a binding fiscal rule requiring a minimum annual primary surplus of 1.5% of GDP and a debt to GDP ceiling of 45% by 2034. These reforms signaled that fiscal indiscipline would no longer define the Ghanaian state. Mr. Speaker, aside, we established the Value for Money Office to strengthen expenditure efficiency, improve the quality of public expenditure, and ensure that every cedi spent delivers maximum value for the Ghanaian people. We established the Fiscal Council to strengthen fiscal oversight, transparency, and accountability. We undertook a comprehensive audit of government payables to eliminate irregular obligations. We also enforced expenditure control. Government amended the Public Procurement Act to require commitment authorization before procurement. Mr. Speaker, this reform firmly linked procurement to approved budget and restored discipline to public expenditure management across the government. Right Honorable Speaker, for the first time, state-owned enterprises are now bound by the commitment authorization, restraining them from spending beyond their means. Mr. Speaker, over the last 10 years, liabilities of state-owned enterprises have added the equivalent of about 3% of GDP to Ghana's public debt every single year. Mr. Speaker, this occurred because state-owned enterprises failed to honor their contractual obligation, compelling government to assume and settle those liabilities. This contributed to the sharp rise in Ghana's public debt. As a result, Mr. Speaker, the resources that would have financed critical infrastructure were used to pay those SOEs' debt. This is part of the reason why Ghana's debt grew unsustainably without the bridges, roads, or hospitals to show for. Right Honorable Speaker, what is the point of ensuring that ministries and even Parliament live within their means if state-owned enterprises are permitted to run up liabilities that the taxpayer are ultimately forced to pay? Mr. Speaker, it is therefore important to recognize that Ghana's debt challenge was driven not only by fiscal deficit, but also by the unchecked accumulation of liabilities by state-owned enterprises. This is precisely why the commitment authorization regime would have been meaningless and ultimately ineffective had state-owned enterprises been excluded from its coverage. Right Honorable Speaker, we also operationalized the sinking fund to strengthen debt management and demonstrate to government that government is committed to meeting future debt obligation. We restored genuine fiscal decentralization by ensuring that at least 80% of the district assembly's common fund is transferred directly to assemblies to support local development. Right Honorable Speaker, we reduced the number of ministers from 123 at its peak to 60 and reduced the number of ministries from 30 to 23 because, Mr. Speaker, because a leaner government is not merely good politics, but it's also a sound fiscal policy. We curtailed non-essential expenditure, including excessive foreign travel, workshops, conferences, and unnecessary vehicle procurement. We also discontinued low-impact programs like the Ghana Cares of Atampa and the U-Start to redirect scarce resources to national priorities. Mr. Speaker, the second key transformational policy reform was the modernization of Ghana's tax regime. The objective was very clear. First, to restore investor confidence. Second, to revive private enterprises. Third, to provide a relief to households and businesses, and also to increase domestic revenue through better policy, stronger compliance, and more efficient administration, not through higher tax reforms. We therefore abolished a number of nuisance taxes, including the following: e-levy, betting tax, COVID-19 health recovery levy, emission tax, VAT on motor insurance. Mr. Speaker, for the first time since 2015, we undertook comprehensive VAT reforms, removing distortions, improving efficiency, and strengthening compliance. More importantly, the reforms have left businesses with more working capital to invest, expand, and create jobs. We also introduced a sliding scale royalty regime for gold to ensure that Ghanaian people receive a fairer share of the economic returns from their natural resources. Right, Honorable Speaker, beyond tax policy, we introduced major customs reforms supported by artificial intelligence and other digital technologies to strengthen compliance, reduce leakages, and improve revenue mobilization. Since the introduction of the AI-powered customs reforms, monthly customs revenue has increased by approximately 17%, reflecting stronger compliance, more effective enforcement, and significantly reduced leakages. We also amended the misuse of the tax refund account, ensure that resources intended for legitimate tax refund was no longer used as a slush fund. Mr. Speaker, the results have been remarkable. Despite abolishing multiple taxes and introducing no new tax handle, non-oil tax revenue increased by 0.5% of GDP, from 12.6% of GDP in 2024 to 13.1% of GDP in 2025. Mr. Speaker, simply put, government collected more taxes in 2025 even after abolishing the nuisance taxes, including the e-levy. Right, Honorable Speaker, the lesson here is simple. Better policy, stronger compliance, and smarter administration will always deliver more sustainable revenue than higher taxes. Mr. Speaker, the third key transformational policy reform was the introduction of a complementary fiscal policy to support inflation targeting, ensuring exchange rate stability, and building external resilience. Central to this reform was the establishment of the Ghana Gold Board to curb gold smuggling, formalize the gold trade, and ensure that a greater share of Ghana's mineral wealth benefits the Ghanaian people. Through this intervention, Ghana generated an additional $15 billion United States dollars in foreign exchange inflows from gold, significantly strengthening reserve accumulation and supporting exchange rate stability. This single policy measure improved Ghana's current account balance by 6.4 percentage points from a surplus of 1.9% in 2024 to 8.3% in 2025. Mr. Speaker, this represents a 4 times increment of the current account surplus in just 1 calendar year. Mr. Speaker, this was not simply a gold policy. This was a macroeconomic stabilization policy designed to strengthen the city, build external buffers, and restore confidence in the Ghanaian economy. To reinforce these gains, government developed and is implementing the Ghana Accelerated National Reserve Accumulation Policy, GANRAP, with the objective of increasing Ghana's international reserve to the equivalent of 15 months of import cover by end of 2028. In a landmark initiative, Mr. Speaker, government has also reached agreement with large-scale mining companies to purchase 30% of their annual gold production for refining by local refineries, strengthening domestic value addition and supporting reserve accumulation. Government further amended the Bank of Ghana Act to make inflation targeting a shared responsibility between the Ministry of Finance and the Bank of Ghana, ensuring stronger coordination between fiscal and monetary authorities. Mr. Speaker, economic reforms must ultimately be judged by their outcomes. I now turn to the evidence of what these key transformational policy reforms have delivered for the people of Ghana. Mr. Speaker, the results of the last 8 months demonstrate that disciplined policies, competent economic management, and consistent implementation delivers tangible results. Real GDP growth grew by 6.0% in 2025, the fastest pace of economic expansion since 2019. Instructively, Mr. Speaker, non-oil GDP grew by 7.6% in 2025, the highest rate in 14 years, demonstrating that Ghana's recovery extends well beyond favorable commodity prices. Mr. Speaker, the momentum has continued into 2026. Real GDP growth reached 6.4% in the first half, exceeding expectations. Mr. Speaker, for the first time in our nation's history, the size of Ghana's economy exceeded $100 billion, firmly establishing Ghana as a major emerging market economy. Ghana's per capita income increased by more than $850 in just 1 year. Mr. Speaker, rising from $2,527 in 2024 to $3,385 at the end of 2025. This is the highest per capita income ever recorded in our country's history. It is therefore not surprising that Ghana is now recognized as the 8th largest economy in Africa. Mr. Speaker, these are not mere statistics. They represent higher incomes, stronger businesses, greater opportunities, and an economy with an enhanced capacity to invest in its people. The labor market is also improving. Unemployment rate declined from 13.7% during the first 3 quarters of 2024 to 12.8% over the same period in 2025. Multidimensional poverty, which measures deprivation across living conditions, education, health, and employment, declined from 24.9% in Q3 of 2024 to 21.9% in Q3 of 2025. Mr. Speaker, this simply means that about 950,000 Ghanaians moved out of the multidimensional poverty in just 1 year. Mr. Speaker, behind these statistics are the hundreds of thousands of families who now enjoy better living conditions and greater hope for the future. Right, Honorable Speaker, inflation perhaps tells the clearest story of all. Inflation declined from 23.8% in December 2024 to 5.4% at the end of 2025 and remained low at 5.3% in June 2026. Fiscal performance has also exceeded expectations. The primary balance on commitment basis recorded a surplus of 2.5% of GDP as at the end of 2025. By end of June 2026, we had achieved a primary surplus of 0.9% of GDP on commitment basis. We are firmly on track to achieve our end-year target of 1.5% of GDP. Mr. Speaker, prudent fiscal management has also translated into a rapid decline in Ghana's public debt. The debt to GDP ratio fell from 61.8% of GDP, 61.8% at the end of 2024 to 44.7% at the end of 2025 and reached 45% by end of June 2026. Mr. Speaker, Ghana has therefore already achieved its statutory debt target of 45% of GDP, years ahead of both IMF program timeline and the targeted date established under the Public Financial Management Act. Mr. Speaker, debt service is also consuming a far smaller share of government revenue. Debt service as a share of domestic revenue declined sharply from 55.7% in 2022 to 28.8% in 2025, freeing up billions of cedis for schools, hospitals, roads, and other national priorities. Mr. Speaker, for the first time since April 2014, Ghana's external and overall risk of debt distress has improved from high to moderate. Even more significantly, the joint World Bank IMF debt sustainability analysis has moved Ghana from unsustainable in 2023 to sustainable in 2025, and now for the first time ever to sustainable with room to absorb shocks.
Honorable Minister, please, First Deputy Speaker to take the chair. Finance Minister, you may continue.
Mr. Speaker, interest rates are singing from the same hymn book. The 91-day Treasury bill rate, a benchmark for the cost of short-term borrowing in Ghana, declined from 11% in December 2025 to 5.73% in June 2026, representing a 536 basis point reduction. The 182-day Treasury bill rate also fell from 12.52% to 7.69%, down by 483 basis points. Mr. Speaker, similarly, the 364-day Treasury bill rate declined from 12.94% to 12.82%, a 12 basis point decline. And across the entire yield curve, average decline was 344 basis points. 2 years, 3 years, and 5-year government bonds are now trading within the range of 11% to 12.6%, compared with about 20% a year ago. Right, Honorable Speaker, monetary policy rate has also declined by a cumulative 1,300 basis points, from 27% in January 2025 to 14% in July 2026. Mr. Speaker, these are not merely lower interest rates, they are lower borrowing costs for households and businesses, creating room for entrepreneurs to invest, expand, and create jobs. We have also made significant strides on the external front. The current account recorded a surplus of 8.3% of GDP in 2025 and has remained strong through the first half of 2026. The cedi appreciated by 40.7% against the United States dollar in 2025, reversing years of sharp depreciation and restoring confidence in the Ghanaian economy. Mr. Speaker, taken together, these results demonstrate that the 2026 budget is firmly on track. The targets we set at the beginning of the year were not aspirational. They were grounded in sound policy, disciplined implementation, and realistic assumptions. The performance of the economy in the first half of 2026 confirms that we're on course to achieve them. Economic growth is exceeding target. Inflation is below the projected range. Fiscal performance is stronger than programmed, and the debt trajectory is improving faster than expectation. Mr. Speaker, the detailed macroeconomic performance will be presented in subsequent sections in this review. Right, Honorable Speaker, the commitment we made to the people of Ghana are being honored, and the results are evident. I now wish to speak, Mr. Speaker, I now wish to speak directly to every Ghanaian listening to me this afternoon. To the market trader whose purchasing power has improved because inflation has fallen. To the entrepreneur who can now borrow at lower interest rate to expand their businesses. And to the worker whose income now stretches further because the cedi has stabilized. These improvements are not abstract statistics. They are the dividend of sound and competent economic management. We recognize that the sacrifices required to restore the economy were significant, and that many households continue to face challenges. But we also know that the foundations of Ghana's economy are now firmly in place. Fiscal discipline has been restored. Macroeconomic stability has returned. Confidence has been rebuilt. And the institutions needed to safeguard these gains have been strengthened. Under the leadership of His Excellency President John Dramani Mahama, Ghana is not going back. Ghana is moving forward. Mr. Speaker, the government that has delivered these results over the past 18 months has earned the trust to continue implementing the reforms that will secure Ghana's long-term prosperity. Right, Honorable Speaker, next week, the Executive Board of the IMF is expected to approve the final review of Ghana's Extended Credit Facility Program, bringing to a successful conclusion the financial bailout IMF program. The Executive Board is also expected to approve a 36-month policy coordination instrument, a non-financing arrangement designed for countries that no longer have and are not expected to face balance of payment needs. Mr. Speaker, the PCI will anchor our next phase of reforms, strengthening macroeconomic resilience, support broad-based growth, and signal our unwavering commitment to sound and disciplined macroeconomic policy. The PCI will support reforms across 6 priority areas. First is to maintain growth-friendly fiscal consolidation. Second is to preserve debt sustainability. Third is to strengthen fiscal transparency and governance. The fourth is to enhance monetary and exchange rate policy framework. The fifth is to reinforce financial sector stability. And finally, to promote economic diversity and inclusive growth. Mr. Speaker, we believe our strong implementation record, together with the successful execution of the PCI, will strengthen Ghana's path towards investment-grade status and enhance our ability to mobilize concessional and development financing for productive public investment. The PCI will include quantitative and 26 reform targets, monitored through semi-annual reviews to ensure sustained implementation of reforms that are critical to achieve our ambitious policy objective. Mr. Speaker, the details of the PCI targets are provided in detail in the media fiscal review document before the House. Right, Honorable Speaker, I now turn to macroeconomic performance for the first half of the year. Mr. Speaker, Ghana has not merely met its first half-year target, it has exceeded them. Mr. Speaker, overall GDP growth was 6.4% in the first quarter of 2026, well ahead of the 4.8% full-year target. Non-oil GDP growth was 6.3% in the first quarter of 2026, well ahead of the 4.9% full-year target. Inflation has more than halved, falling from 13.7% in June 2025 to 5.3% by end of June 2026, against a target of 8 plus or minus 1% at the end of the year. The primary balance recorded a surplus of 0.9% of GDP on commitment basis, firmly on track to achieve our end-year target of 1.5% of GDP. Gross international reserves was 5 months of import cover as at end of June 2026, exceeding the target of at least 3 months of import cover. Mr. Speaker, January to June 2026, fiscal performance. Mr. Speaker, the provisional fiscal performance for the first half of 2026 is presented against the following approved 2026 fiscal target. Overall deficit target on commitment basis of 2.2% of GDP, primary surplus of 1.5% of the GDP, overall deficit on cash basis of 4% of GDP, and primary surplus on a cash basis of 0.4% of GDP. But Mr. Speaker, provisional fiscal outturn for the first half of 2026 was stronger than anticipated, indicating continued prudence in fiscal management and enhancing the government fiscal consolidation agenda. Non-oil tax revenue as at end of June 2026 was 6.4% of GDP, compared to a target of 6.5% of GDP. Mr. Speaker, domestic revenue reached 7.7% of GDP by June 2026, compared to the target of 7.8% of GDP. Mr. Speaker, total revenue and grant reached 7.8% of GDP by June 2026, compared to a target of 7.9% of GDP. Total expenditure on commitment basis at the end of June 2026 was 8.0% of GDP against the half-year target of 9.9% of GDP. Primary expenditure, which excludes interest payment, was 6.6% of GDP by June 2026, compared to half-year target of 8.1% of GDP. Interest costs at 1.3% of GDP as at the end of June 2026 against the half-year target of 1.8% of GDP, indicating that we have saved on interest about 0.5% of GDP, reflecting lower interest rates and improved debt management. Mr. Speaker, this performance reflects the resolve of this administration to make difficult decisions, implement them consistently, and maintain unwavering fiscal discipline. Mr. Speaker, I now move to public debt. At the end of June 2026, domestic debt accounted for 54.4% of Ghana's total public debt portfolio, while external debt accounted for 45.6%. On the 17th of February 2026, government honored the 6th domestic debt exchange program coupon payment of 10.1 billion on time and in full. Mr. Speaker, the 7th DDEP coupon payment of 10.8 billion cedis falls due on the 18th of August 2026. Let me use this opportunity to assure this House that it will be paid on time and in full. Mr. Speaker, since January 2025, the government has paid a total of $2.1 billion in principal and interest to Eurobond holders without placing undue pressure on Ghana's foreign exchange reserves. Right, Honorable Speaker, there was a time when the world doubted us. Today, every payment made on time answers that doubt, assuring bondholders in London, pension funds in New York, and investors at home that our word is our bond. Payment after payment, coupon after coupon, Ghana is proving one thing beyond dispute. We now keep our word. We now keep our word. That is how market confidence is rebuilt, not through speeches, but through repayment. Mr. Speaker, financial markets have delivered their verdict on Ghana's disciplined fiscal policies and prudent debt management. Right, Honorable Speaker, borrowing costs are down by half. In other words, government is borrowing less. That alone has saved us, this country, 4.2 billion cedis in just 6 months. Mr. Speaker, as Treasury bill rates decline, lending rates across the banking sector are also falling, making it cheaper for households, entrepreneurs, and businesses to borrow, invest, and expand, and at the same time, create jobs. Mr. Speaker, Ghana's Eurobond yields have fallen by about 300 basis points since the beginning of the year. This is not just a number. It is the market vote of confidence in our economy and our reforms. 3 years ago, Mr. Speaker, Ghana could not borrow on the international capital market at any price. Today, the market is inviting us back, but we are not in hurry. We are not in hurry. Right, Honorable Speaker? 3 years ago, Ghana could not borrow on the international capital market at any price. Today, the market is inviting us back, but I want to assure you, we are not in hurry. 3 years ago, unsustainable debt defined our crisis. Today, our debt to GDP ratio has fallen to 45% and still declining, ahead of every target. Mr. Speaker, the work is not finished, and the PFM debt rule requires continuous vigilance. But the direction is right, the momentum is real, and the foundation is solid. Mr. Speaker, Ghana's external debt restructuring, initiated after the sovereign debt default of 2022, is now at its final stage. In just 3.5 years, Ghana has moved from default to credibility, from debt distress to debt sustainability. from market exclusion to a renewed investor confidence. This is an achievement every Ghanaian can be proud of. Mr. Speaker, following the 2022 public debt default, government could not borrow long-term in cedis and relied heavily and solely on treasury bills to finance the budget. Mr. Speaker, Ghana has now overcome what the economists describe as the original sin, which is the inability of a country to borrow over the long term in its own currency. Mr. Speaker, 3 years restriction on new cedi bond issuance introduced as a result of the debt default caused this original sin. Mr. Speaker, in April 2026, Ghana successfully raised $2.7 billion through its first 7-year cedi-denominated bond since the 2022 debt default. This marks an important step in rebuilding the domestic bond market and restoring long-term financing in our own currency. This further demonstrates that Ghana has regained the ability to mobilize long-term financing in its own currency for development. Right Honorable Speaker, I'm proud to announce that Ghana has now overcome the original sin. Mr. Speaker, we have overcome the original sin. Whilst I now take you to the sinking fund. While Ghana's debt restructuring is nearing completion, prudent debt management requires us to look beyond today to tomorrow's obligation. Mr. Speaker, in 2027, DDEP bonds that will fall due is 58 billion Ghana cedis. Another 53 billion Ghana cedis will fall due in 2028. In 2 years alone, Ghana has to repay 111 billion cedis. 111. Mr. Speaker, this is the true Agenda 111. Right, Honorable Speaker? This is the true Agenda 111 Ghana must deal with. Why? Because the DDEP was not designed to solve Ghana's problems. Mr. Speaker, let me take this again. This is the true Agenda 111 Ghana must deal with. Why? Why? Because the domestic debt exchange program was not designed to solve Ghana's debt problems. It was designed to postpone it deliberately, knowingly, and cynically, unfortunately. Mr. Speaker, its architect mortgaged tomorrow to survive today. Mr. Speaker, they had a duty to fix the roof. Instead, they moved the leak to another room and declared the house repaired. Right, Honorable Speaker? Meeting obligations of this magnitude requires advanced planning, not last-minute scrambling. This is precisely why this government has strengthened the sinking fund to set aside money to repay future debt obligations that we inherited. Right, Honorable Speaker, under the 2026-2029 medium-term debt management strategy, we pledge that 7% of non-oil tax revenue, together with proceeds from domestic bond issuance, will go into the sinking fund as a war chest for the 2027 and 2028 maturities.